So we have a lot to talk about today, so let's just get into it. Housing is not expensive by accident. It is expensive by design. And once you understand why, you realize something uncomfortable. Homes were never meant to be affordable for everyone. For most of modern history, one income could buy a house. A factory worker in the 1950s could support a family, own a home, and still save money. Housing was not perfect, but it was reachable. It was a basic milestone of adulthood. Today, even two professional incomes struggle to qualify for a mortgage. People blame zoning laws. They blame immigration. They blame construction costs. They blame greed. But the real reason housing is broken goes much deeper than any of those surface explanations. Housing did not simply become expensive, it transformed into something else entirely. It became an investment asset. At first, homes were places to live. Then they became places to store wealth. Then they became financial instruments. Banks, hedge funds, pension funds, and foreign investors entered the housing market, not to live in homes, but to extract profit from them. Once that happened, affordability stopped being the goal. Price growth became the goal. Here is the key truth nobody says out loud. Housing prices are not driven by wages. They are driven by debt capacity. When interest rates fall, people can borrow more money. When people can borrow more money, they bid higher prices, not because homes are better, but because banks allow larger loans. Every housing boom is really a credit boom. If banks lend more, prices rise. If banks tighten, prices stall. Housing is not controlled by supply and demand in the way people think. It is controlled by the flow of debt. Governments quietly depend on this system. Rising home prices create the illusion of prosperity. Homeowners feel richer. Consumers spend more. Property taxes rise. Construction expands. Politicians point to growth numbers and call it success. A housing crash is politically dangerous. Banks fail. Retirement funds collapse. Unemployment rises. Voters panic. So instead of fixing housing, governments protect it. They lower interest rates. They subsidize mortgages. They guarantee loans. They create programs that push more money into the market. Every solution adds more fuel to the fire. People say the problem is supply. Just build more homes. It sounds logical, but builders do not build for affordability. They build for profit. A luxury condo produces higher margins than a starter home. A $900,000 house generates more profit than a $300,000 one. So developers naturally chase the top of the market. Even when new housing is built, it is not the housing regular people need. It is high-end units for investors and wealthy buyers. That is why cities have empty luxury towers and homeless populations at the same time. More supply does not fix a market that is structured around investment returns instead of human need. Then came the investor takeover. In many major cities, 20 to 30% of homes are now owned by investors. Entire neighborhoods are rental properties. Corporations outbid families in cash. Houses are flipped instead of lived in. This creates a self-reinforcing loop. Investors buy homes. Prices rise. Renters cannot save. Renters stay renters. Investors buy more homes. Ownership concentrates upward. Fewer people own more property. More people rent forever. Housing becomes like stocks, owned by institutions, not by families. This is not a flaw in the system. It is the system working as designed. If housing prices fell 30% tomorrow, banks would panic. mortgage defaults would spike, a recession would hit. Millions of homeowners would feel poorer overnight. So governments choose the least painful path. Keep prices high, protect lenders, protect homeowners, protect investors, blame zoning laws, promise reform, delay real solutions. True affordability would require allowing prices to fall, allowing investors to lose, allowing banks to take losses, allowing housing to stop being a financial asset. No political system is willing to do that. There has also been a psychological shift. People now believe housing only goes up. That belief alone pushes prices higher. Fear of missing out drives buyers into debt. Speculation replaces long-term planning. Rent becomes permanent. Homeownership becomes a dream instead of an expectation. Housing used to be a life milestone. Now it is a financial weapon. The cultural narrative changed from shelter to wealth. A home is no longer where you live. It is what you leverage. It is what you borrow against. It is what defines your net worth. Once housing becomes a pillar of wealth, it cannot be allowed to fail.
The system is trapped. High prices hurt young people. Low prices hurt everyone else. So the system chooses to protect owners and sacrifice renters. This is why every generation hears the same promise. They tell you, we are working on housing. We are building supply. We are creating programs. We are fixing zoning. We are studying the problem. And nothing changes. Because the real solution would require breaking the financial engine that now depends on housing inflation. Housing is no longer treated as a human right in modern economies. It is treated as a financial instrument. And once something becomes a financial instrument, it stops serving humans first. This is not capitalism failing. This is capitalism doing exactly what it was built to do: maximize return on assets. If you are waiting for housing to become fair again, you are waiting for the system to reverse its own incentives. That almost never happens voluntarily. So what does this mean for you? You have two choices. The first is to wait for affordability to return, to hope for policy change, to hope for a crash, to hope for fairness. The second is to understand the game and adapt. That means thinking of housing as an asset class, not as a moral promise. It means building income before buying. It means being flexible about location. It means considering different cities or even different countries. It means investing in things besides property. It means not tying your entire future to one piece of real estate. The system rewards owners, not workers. It rewards leverage, not wages. It rewards capital, not patience. Housing did not become expensive because of immigrants, zoning, or laziness. It became expensive because it became profitable. And once something is profitable, it is protected. That is why housing will never be affordable again. Not because it cannot be, but because it is not allowed to be. If you want daily stories about money, power, and how the economy really works, follow the Capital Brief channel. Tomorrow, we talk about how Dubai became rich in a meager 50 years.